Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar is remaining to somewhat a bearish outcome after the topside rejection around 74.40.60. The market has plummeted and now looks towards the level of 72.70. With the low being 72.83, a break of 72.70 would expose the downside risk and look towards a 60-day moving average around 71.90 to 72 cents. In light of the technical pattern, especially from the RSI, does look favourable, especially with the dollar index, which measures the greenback strength against a basket of 6 major currencies, has staged a significant rise above that 99 handle. This is seen on the flip side, the euro remaining somewhat heavy as it takes a stab at the downside close to that 108 region, with a broader picture still holding as a long-term base at 107.50.85, which previously, as we see here, at 4 attempts, rejected very clearly. We are oversold, so therefore I feel the market will start taking profit relatively soon. We've still got this week to look to the ECB rate decision, and also we have the US CPI number coming out also later in the week. Dollar yen rejects the bottom side of the range at 114.70 and now looks back to the top side at 115.70 or maybe even to 116. In light of the pattern, it is a little bit stronger than previously seen. So let's see if the market has the upward drive through 115.70, but do be on your guard, as we did see many rejections from there, as we've seen many rejections from the bottom side. So the market is still whipsawing inside this parameters of 114.60 to 115.70. Sterling crushed the level of 131.60 on Monday and now leaving the downside risks a little bit further. I am neutral, but I will say that the market could even see a low around 130.60 and reassess from there. Sterling Kiwis found a base around 190.25.50 area and putting in a bit of a stronger performance as the RSI is improving, therefore looks towards 194 area around that 194 figure 50 and maybe see further challenge from that top side, maybe a rejection. But nevertheless, the market has rebounded and put in a little bit of a firmer stance into Tuesday. The whipsaw price action above 1,970, the market is still a little bit mixed due to the bearish divergence. Although I am neutral at these highs and waiting for opportunity, I'm still keeping a very close watch on how this RSI performs. And if it does come into quite a negative play due to the ADX overheating, then a break of 1,970 could still see a significant drop. We have seen very whipsaw prices and $100 range just recently, so still be on your guard if you are trading this market. And also the gap that was created on Monday to the top side at one stage could have been an exhaustion gap, but unfortunately when we look at the shorter term play is that the market did fill that gap very clearly and now it looks to a potential rise as we're coming back into Tuesday's session. The market is looking back to that 125 rejection area. I don't have a strong view due to the RSI showing some bearish divergence, so we can still see very whipsaw price action. So I'd rather wait for better opportunity. Well, that wraps it for the day. Thank you very much for joining me, but please look out for the intraday report, and I look forward to speaking to you tomorrow.